Good day and welcome to the Q4FY22 earnings conference call of Indian Energy Exchange, hosted by Axis Capital Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sumit Kishore from Axis Capital. Thank you, and over to you, sir.
Thank you, Margaret. Good afternoon, ladies and gentlemen. On behalf of Axis Capital, I'm pleased to welcome you all for the Indian Energy Exchange Q4FY22 earnings conference call. We have with us the management team of IEX, which is represented by Mr. S.N. Goyal, the Chairman and Managing Director. We also have the senior management team. We will begin with the opening remarks from Mr. Goyal, followed by an interactive question and answer session. Over to you, sir.
Good afternoon, everyone, and welcome to the earnings call for Q4 and fiscal year 2022. I hope everyone continues to be safe and healthy. Joining me today are Mr. Vineet Harlalka, Mr. Rohit Bajaj, Mr. Amit Kumar, Mr. San Gautam, Mr. Samir Prakash, Ms. Shruti Bhatia, and Mr. Archit Gupta. Friends, the COVID-19 pandemic-induced slowdown is now behind us. The Indian economy is gradually regaining the growth momentum and is now poised as one of the most promising growth economies in the world. For IEX, the fiscal year 22 holds special significance since we achieved all-time high volume of 102 billion units, achieving a growth of 37% on year-on-year basis. As per recent government data, during the third quarter of fiscal year 2022, India's index of industrial production held up to 1.7% in February from 1.5% in January 22. Cumulatively for the fiscal year 22, we expect India to achieve robust GDP growth of 8.9%. The increase in industrial and economic activity has direct correlation with demand for electricity. In the fiscal year 22, the national peak demand for electricity increased to 201 gigawatt, seeing a 6% year-on-year growth, while electricity consumption increased to 1370 billion units, seeing about 7.8% year-on-year growth. As on 31st March 2022, the total installed generation capacity reached 399 gigawatt. The renewable capacity at 157 gigawatt is approximately 39% of installed capacity. The growing contribution of renewable energy is aligned to India's voluntary commitment of 500 gigawatt from renewable by 2030, made by our Honorable Prime Minister at COP26 summit held in November 21 at Glasgow. The power policy and regulatory paradigm has been undergoing significant transformations to align to the aspirations of building a sustainable and efficient energy future. Several policy and regulations took place during this fiscal year, and most of these developments are conducive to further growth and development of the power market. The most significant policy and regulations initiatives in this quarter are the CRC Ancillary Service Regulation 2022, which includes the secondary reserve ancillary services along with exchange-based tertiary reserve ancillary services, aiming to maintain the grid frequency stability close to 50 Hz, besides increasing reliability. Second is, CRC has also issued now draft REC regulations, redefining the process of issuance, including accreditation, issuance, exchange, redemption. The draft regulation also proposes inclusion of other non-conventional technologies such as offshore wind, hydro, municipal solid waste, biomass, and biofuel in the RE certificate category. CRC has approved procedure for related to implementation of National Open Access Registry, which will enable automation, increase efficiency and transparency in market processes, making them seamless, automate transmission allocation, thereby enabling greater efficiency in the power market. In fact, NOR is going to be implemented from 30th of April of this month itself. CERC has issued Draft Connectivity and General Network Access Regulations 2022, which will simplify as well as rationalize transmission allocation, transmission pricing, and support strengthening and augmentation of transmission network. These regulations will further support growth of power market in the country. On the policy front, the Ministry of Power recently introduced the Green Hydrogen Policy and guidelines for setting up EV charging stations. Both these initiatives are aimed at facilitating the energy transition. Continued thrust on distribution reform, initiated process for amending National Electricity Policy 2021, green open access for consumers with contracted load of 100 kilowatt and above, amendment to deviation settlement mechanism regulations linking deviations to the price discovered at the exchange platform, are few other significant policy and regulatory initiatives undertaken during the fiscal 2022. We are keeping a close watch on the policy and regulatory developments, assessing their impact as well as the new opportunities that these developments will unfold. IEX performance during the fourth quarter of the fiscal year 2022, IEX achieved 27.032 billion units of volume, comprising of 23.65 billion units in conventional power market, 1.12 billion units in green market, and 22.49 lakh certificates in the REC segments, which is equivalent to 2.24 billion units. We achieved 21% year-on-year volume growth across all market segments during the quarter. The growth in conventional power market was driven by increase in electricity consumption in states such as Maharashtra, Gujarat, Andhra Pradesh, Tamil Nadu, and Punjab. Cumulatively, in the fiscal year 2022, 102 billion units volume comprising of 90.6 billion units in conventional electricity market, about 5 billion units in green market, and about 6.4 billion units in the certificate market. Further, the new segments such as RTM, GDAM, GTAM played a pivotal role in accelerating volume growth and contributed 24% to the total volume. The conventional electricity volume, the day-ahead, term-ahead, and the real-time market achieved 90.61 billion units volume and saw 24% year-on cumulative growth. In the cross-border electricity market, which is a part of conventional day-ahead power market, we achieved about 1.05 billion unit volume. Both Nepal and Bhutan have been participating actively on the sell side and buy side. We are consistently in touch with Bangladesh and are positive that they would be joining this market shortly. We are working towards building an integrated South Asian power market in the power market. The green market, comprising of green day-ahead and term-ahead segments, achieved 4.945 billion units, which is 5 times increase over the last year. The renewable energy certificate market achieved a volume of 60.78 lakh certificates, equivalent to 6.078 billion units. The energy saving certificate market achieved trade of 2.86 lakh certificates, equivalent to 286 million units of volume. With customer centricity at its core, at IEX we endeavor our endeavor always has been to advance and strengthen exchange technology and introduce innovative products and services to provide the best-in-class experience to our customers. We launched the web platform to provide a digital onboarding experience anytime, anywhere, easy and secure access to the trading system. We also market data insights for our customers. To make the bidding experience seamless with zero manual effort, we launched automated bidding through application programming interface (API) for the real-time market products. We soon plan to commence API-based automated bidding for DAM, GDAM, and REC segments. API also has been launched for the market data to enable the market participants to automatically fetch data across the market segments. We have also provided bid creation tool to our customers to make it very easy and fast to create bulk bid details for unload on our exchange platform. Further, the value-added services have been introduced for the renewable generators to facilitate generation forecasting solutions from the best-in-class service providers and paneled with IEX. Lastly, I am enthused to share with you that CNBC has recognized the outstanding leadership demonstrated by IEX during the challenging COVID times, as well as the positive and transformational effect we have been bringing to the power sector. Honorable Finance Minister Srimati Nirmala Sitharamanji recently conferred the Most Promising Company of the Year award to IEX by the 7th edition of India Business Leaders Award organized by CNBC TV18, held on 1st April at Mumbai. Indian Gas Exchange, I will now briefly touch upon developments regarding the gas marketing and IGX. The gas markets saw significant traction in the fiscal year 2022. IGX has been growing from strength to strength since its inception and has been solidifying its performance by creating new records on the business front almost every month while accelerating development of the gas market. IGX has achieved financial break-even in the fiscal year with a profit after tax of almost about 1.8 crores. During the fourth quarter of the fiscal year 2022, IGX achieved a total volume of 7 million MMBTU, and cumulatively in the year FY22, IGX achieved total volume of 12 million MMBTU compared to 0.2 million MMBTU in the last year. During the year, prominent leaders in the petrochemical sector, such as BPCL, IOCL, IGL, ONGC, Adani Gas Private Limited, among others, joined IGX as members. I am pleased to share with you that recently IGX also won the prestigious Diamond Award in the Smart Startup category of the year at the 6th edition of the India Smart Grid Forum 2022. Financial and business performance of the company. I will now come to the financial and business performance of the fourth quarter and the fiscal year 2022. On a standalone basis, revenue for the fourth quarter of the fiscal year 2022 increased to 128 crores, witnessing a growth of 25% on year-on-year basis. The PAT grew by 27% with a margin of 63%. The revenue for the fiscal year 2022 increased to rupees 478 crores, witnessing a growth of 34% YOY basis. The PAT was 302.5 crores, which grew by 42% YOY basis with a margin of 63%. The company declared a final dividend of rupees 1 equivalent to 100% of the face value of the equity shares, taking total dividend payout during the year to 200% of the face value of the share. The key highlights of the fiscal year 2022 included 90.61 BU volume in the conventional market, achieving a growth of 24%. 4.945 billion units volume in the green market, achieving 30% volume growth. 63.64 lakh certificates constituting 60.78 lakhs of REC and 2.86 lakhs of energy saving certificates. Friends, we are working towards introducing long duration contracts in both electricity and renewable energy by the end of first quarter 23. We are also working to commence other new market segments such as ancillary markets, capacity markets, gross bidding contracts, national open access registry, etc., and remain optimistic about commencing this in this fiscal year itself. In February 22, CRC also approved introduction of hydropower contracts at IEX, which will enable obligated entities to comply with hydropower purchase obligation. In our quest to consistently advance customer centricity, we will be shortly launching web-based bidding platform to enable our market participants easy and secure access for bidding on IEX technology, IEX platform. Further, we also aim to provide advanced data analytics as well as new technologies such as robotic process automation to eliminate human dependency in our processes. These initiatives would allow us to focus on introduction of new products and services to enable our market participants to derive greater value through exchange platform. Besides strengthening the core business through new products, we are continuously assessing adjacent business opportunities to further diversify our business. With that, I shall conclude by thanking all of you. We will now commence the question and answer session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, you may press star and 1 at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mohit Kumar from DAM Capital. Please go ahead.
Yeah. Good afternoon, sir, and congratulations on a very, very good quarter and a fantastic year. So my first question is, sir, it has been a story of contrast, especially the April month. You see strong demand in the country, but at the same time our volume is suffering because of price cap. Also, the shift to TAM and GTAM is causing loss to volume for us. How do you see it, going forward?
Yeah, Mohit, thank you for congratulating us on the performance. And as far as the demand scenario is concerned, in fact, increase in demand in the month of April is as high as 11 to 12%. It was mainly because of revival of the economic activity and early onset of the summer. We did not expect summer to be so severe in the first week or second week of April. And the demand has increased by 11-12%. At the same time, the imported coal prices are very, very high, and imported gas price, LNG price is also very high. What I understand that cost of generation on the imported coal is about 9 to 10 rupees. On the gas, it is plus 25 rupees. So generation on these imported fuel is less. It is less by almost about 9 to 10,000 megawatt. So because of this, I think there is a gap between the supply and the demand. And, this resulted in increase in the price on the exchange platform. Price had increased to almost about 18, 19 rupees. Many of the time blocks, the price was 20 rupees. And regulator and the government, when they analyzed that even when the price is 20 rupees, gas-based generation is not coming. They are not selling on the exchange platform. It is only the imported coal with the variable cost is 9 to 10 rupees. So they felt that it is mainly because of the high demand the price has increased. So to avoid that high price in the market, they capped the price. So that is one thing which has happened, because capping the price in the efficient market led to the process of that there is no price discovery on the exchange platform. And this has led to buyers shifting on the alternate platforms, alternate options. So this is something which has happened now, but I believe this is a phenomena which is for a short period. In the month of May, particularly after 10th of May, the wind generation starts increasing, and we are expecting almost about 150 to 200 MU additional generation from wind. The hydro generation will also start increasing. So I'm sure you will see in the month of May situation improving and price discovery again happening on the exchange platform.
So thank you for the detailed answers. So my second question is on the gas exchange revenue which you have booked in the quarter. That number is 28 lakh. That number seems to be slightly on the lower side. Can you confirm the transaction fees which you have earned from the gas exchange during the quarter?
Just a minute.
Yeah, for the quarter, the transaction fee was 5.6 crore.
Okay, because it segmental shows 28 lakh, that's the reason I'm asking.
The reason being because the IGX ceased to be a subsidiary company effective from the mid of January. So the consolidation was only till date, and post that number being associated company, so the numbers are not consolidated. And the majority of the volume started picking up from that, so that's why the number doesn't match.
Understood, sir. Thank you, sir, and all the best. Thank you.
Thank you. The next question is from the line of Bharni Vijay Kumar from Spark Capital. Please go ahead.
Yeah. Good afternoon, sir. Am I audible?
Yeah.
Yeah. So, of the new products that we are planning to initiate in this FY23, like National Open Access Registry product, ancillary markets, gross bidding contracts, etc., could you individually highlight the potential in, say, billion units overall, and also color on what is the purpose these products will solve for the buyer? Like, what is the need that it will serve?
Yeah. One is long duration contracts. Long duration contract is today on exchange platform. We can launch only products for delivery up to 11 days. It was because of a reason that in the earlier SEBI regulations there was a provision that forward contracts cannot be launched on the spot exchanges. But that issue has been resolved now by the order of the Supreme Court, and now delivery contracts will be regulated by CRC and derivatives by the SEBI. So CRC, we have applied to CRC for approval of long duration contracts for delivery up to 365 days. Hearing was held, public consultation was done, and now order is reserved. We are expecting the order shortly from the regulator approving this long duration contract. Now we will be able to offer to the market participants delivery contracts up to 365 days. So with this, we will be able to then also get the market, get a good share out of the bilateral market. And volume happening in the bilateral market is about 50, 55, 50, 60 BU. So that is the market size, and we want to get into this market size also. That is for the long duration contract. And ancillary market is, regulator has notified the ancillary services, and under the ancillary services, the tertiary ancillary services through the market, through the exchange. So exchange will be inviting bids from the market participants who want to participate in this market, and then we will give these details to the system operator for inviting the generation from them or requisitioning the generation from them based on their merit order. So that market will be started by the regulator as and when they notify the date of execution of that. And that is yet to be notified. They have issued the regulation, but the date of starting is yet to be notified. Third is gross bidding. Gross bidding, again, we have applied to the regulator for the approval of this product. This is a very, very innovative product. I mean, I'm sure you have heard about the ambit. Ambit is a concept which Government of India introduced to have the entire generation of the country through the market, through the exchange platform. And since it was mandatory, there was a lot of observations, a lot of resistance by many of the market participants, many of the state distribution companies and states. So we introduced gross bidding, which is a sort of voluntary ambit. I mean, it is up to the state to participate in this market, and if they participate in this, they will be able to make some significant gain out of it by efficiently selling and purchasing their power. So we have, this kind of products are in operation in a couple of exchanges in other part of the world. Nord Pool and Japan Power Exchange, this cross bidding concept is working very efficiently. So we are also talking to the states, doing the policy advocacy, explaining them how can they get benefit out of it, so that as and when this product is approved by the CRC, we can launch this and we can get good participation in this. CRC is yet to approve this product. I think they are looking for more public discussions and comments on this. And fourth one was National Open Access Registry. National Open Access Registry is not a new product. It is basically automation of the entire open access process. Today, for the open access, application has to be made in the SLDC, RLDC, and NLDC. They have to do the process manually and give the open access. And particularly at the state level, there are a lot of problems in this. Now, with the National Open Access Registry, everything will be automated. This will streamline the process. So I'm sure this will also further give a boost to the spot market. It is difficult to identify the potential opportunity through this NOR, but then this will smoothen the process. So, and you know, not only the new products, whatever products we launched in the year 2021, I think a lot needs to be done in this year to get participation in these markets. Like green market, which we started last year, in this market we have done a volume of almost about 5 BU. But I think there is a large opportunity. We are interacting with many IPPs, many public sector companies who are in the green generation space, and discussing with them that there is good opportunity for them to set up renewable energy through the market-based instruments. And we are also getting favorable response from them. And in fact, in the policymakers and regulators are also quite open to this idea. So I'm sure with all these initiatives, it will be possible to maintain the growth momentum.
Yeah. Thanks for that. My second question is on the MBED. Can you give us update on when is this likely to commence, when CERC is likely to come up with final guidelines on this? How much of volumes we can expect this year, and what could be the transaction fee on these volumes?
MBED, you said?
Yeah, MBED, yes.
I think we should stop discussing about the MBED now. I think nothing is happening on the MBED. That's the only thing I can say. Ministry of Power has issued a small document to CRC, sent the document to CRC for further taking action, and CRC is not taking any action on that.
Understood, sir. Loud and clear. Thank you so much. Yeah.
Thank you. The next question is from the line of Sumit Kishore from Axis Capital. Please go ahead.
Thanks, sir. My first question is, could you comment on the CERC order dated 26th April and the potential implications for transaction fee across contracts? Also, we understand that your competition might already be offering rebates or incentives on transaction fee. What is your business strategy in this regard?
Yeah, first of all, see, when we filed our petition with CRC, that was filed in the month of January, that petition had many items in that. And there were many compliances with respect to the PMR. We wanted to inform them to CRC and the certain minor approvals in the rules and business laws, and also approval of the transaction fees. So for the other activities, no public consultation was required, so CRC has approved all of them.
Yeah.
And on the transaction fees, CRC said that you file a separate application and we will deal that. And same thing they have done for the other exchanges also. So they will deal with these transaction fees for all the three exchanges together. I mean, for the two operating exchanges and the third exchange who wants to start their business, they have also applied for approval of transaction fees. So they will deal with the transaction fees for all the three exchanges together. And I am reasonably sure to get approval of the fees as specified by CRC in the regulation, which is 2 paisa on either side. They themselves are specified in the regulation, and that has been the industry practice from the last 11 years. So I don't see any challenge in that. In fact, CRC has approved a trading margin of 7 paisa for the traders. So value provided by the exchange in the process is much higher than what a trader is doing. So if 7 paisa is approved for the traders, I'm sure for the power exchanges 2 paisa on the other side is reasonable.
Sure. My second question is, could you also speak about the likely volumes expected in REC and energy savings certificate in FY23? And if you could comment on your market share in the last fiscal and even data for April might have come.
This year we did up almost about 60 lakh certificates, and I'm sure in 23 the number should be higher than this. But again, very difficult to say because transactions in REC market is dependent on participation of the states and state participation because of their financial condition. We don't know to what extent it will happen. But in spite of this difficult condition, still we are reasonably confident that almost about 80 to 90 lakhs of REC certificate transactions should happen.
Okay. So 80 to 90 lakh is for the market?
No, for IEX.
For IEX. Okay. So just to understand this better, I mean, in FY22, for the period REC traded, what was your market share? What was the market share of IEX?
It was 75% plus for IEX.
75%. Okay. And last question, is there any update on when HPX, the Pran Urja is likely to commence its operations as an exchange?
I think you should be in a better position to tell me that.
Okay, sir. We'll leave it at that. Thank you.
Tell me if you have any information.
Sure.
Thank you. The next question is from the line of Kunal Thanvi from Banyan Tree Advisors. Please go ahead.
Hi, thank you for the opportunity. So I had two questions. One was on the dividend payout policy. You look at our balance sheet, we've got a lot of cash now, but dividend payout continues to be the same the way it was last year. Any thoughts on how dividend policy would pay out going ahead? And second was on if you look at our volumes now and that is ex-REC, given the higher base, we kind of have plateaued or even degrowing on a on the basis and because of the high base. How do we how do we look at volumes from here on with of course you talked about a lot of products that are expected to come, but those could be say in next 2 to 3 years, like next 1.5 year, 2 year. How do we look at the volumes? Like, will it be a decline first and then a rise in the volume post the new products are launched and they gain the scale?
First, number one is dividend. See, we paid this year 1 rupee dividend, which is 100% of the face value in the month of January. And now we have declared another 1 rupees. That makes it almost about dividend outgo of 180 crore rupees, which is 60% of the total profit.
What I meant was as a percentage of your net profit, right? So the payout ratio.
So it is 60% of the net. It is 60% of the profit. That is one. So, I mean, as I mentioned in the past also, our dividend policy is that at least 50% of the profit will be distributed in the form of dividend. So, we have given this year 60% of the profit in the form of dividend. Second question is about the volume projection for this year, and particularly because of the high base, because of the large growth which we have achieved in the last 2 years. See friends, our market share out of the total generation today is only about 7%. And Government of India vision is to take this short-term market to 25% in the next 3-4 years. And there is a purpose behind this vision. See, if we are going to add large renewable generation capacity in the country, integration of that with the grid will require a very, very liquid market. So that if there is any variation, the utilities can purchase power through the market to make good the variations. And real-time market was also introduced, keeping all these things in view. So there are many policy and regulatory initiatives which are being taken to defend the market. So I believe the opportunity size is much larger. Base is definitely high, and to achieve growth of 35-40% is definitely going to be difficult. But I'm sure reasonable growth of 20-25% should be possible to achieve. But that all depends on the market conditions. I mean, our USP has been creating efficiency in the market and efficient competitive price discovery so that market participants can get benefit out of that. The shortage scenario is not conducive for the market. So if power supply shortage scenario continues for a long time, it may have adverse impact on our volumes.
Sure. Get a point. Makes sense. Thank you so much, and all the very best.
Thank you. The next question is from the line of Ankush Agarwal from Search Capital. Please go ahead.
Yeah. So again, on this CRC order of restricting the prices. So what kind of discussion did we have before this order was implemented, and after this has been implemented, in terms of would it be a long-term solution that wherein for the permanently the prices would be capped at 12 rupees, or it's kind of a short-term tenure, some kind of communication that you have received from CRC?
No, we did not have any interaction for capping the price. We had interaction with CRC. They wanted to understand what is happening in the market, why the prices have increased. But what I understand, that there was a direction from Government of India under Section 107 to review the market situation and cap the price. And as per that direction, CRC has capped the price at 12 rupees. This capping is basically what we understand, though there is nothing mentioned in the order, but what we understand is just for this interim period when the deficit is there, and as soon as this situation improves, the capping will be removed.
Right. So what you're saying basically, is that the exchanges are not consulted before this order came.
Yeah.
Is that the right understanding? Right. So in the long term, don't you think this is a detriment to your business model? Because every time power generation increases, obviously the prices is going to go high, right? And that time, the prices are going to be artificially capped, which reduces the transaction on the exchange. So practically, the exchange won't benefit from growth in power demand as such. If there's like in the short term, if the power demand increases, it's actually not beneficial. It's actually detrimental to a business. So any kind of conversation that you think you need to have with the regulator in terms of this.
Now, see, the power demand increase is definitely good for the sector. It is a good economic indicator. But at the same time, we have to ensure commensurate increase in the supply of power. Unfortunately, in the month of April, the demand increase was at a very high level, to 11-12%, and commensurate supply is not available. And I tell you, this is a phenomena which is not only in India, this is world over, this kind of phenomena is happening. Friends, in France, the prices of 30 euro per megawatt hour, which is about 30 rupees a unit, is very common on the exchange platform,
right,
which they had never heard of. So commodity prices have increased, input costs have increased, electricity cost has increased. So I think this is a phenomena which is for a short period, and corrective actions already are being taken. Government of India has already advised all the states and the central PSUs to import coal so that they can supplement the generation by another 4-5%, and if we can have another 4-5% of generation, that's all. That is what is needed to bring enough liquidity in the market.
Right. Got it. Just another bookkeeping question. So for the full quarter, you said IGX achieved 5.6 crores of revenue. Can you tell me the EBIT as well for the quarter?
Yeah, I'll request Mr. Vineet Harlalka.
The EBITDA level is, if you look at the number, absolute number, it was approximately 1.5 crores.
1.5 crores. This is against 1.14 crores in Q3. Is that right?
Yes, sorry, it's 1.8 crores.
1.8 crores. Got it. Thank you.
Thank you. The next question is from the line of Nikhil from DAM Capital. Please go ahead.
Hello.
Yes,
Thank you for the opportunity, sir. You are able to hear me?
Yeah, I can hear you.
We can hear you.
So I've got two questions. So how much was the open access volume as a percentage in FY22, and where do we think it will go in FY23?
See, the open access this year, our clearing price was 4.40 rupees. There is a very high increase in the clearing price. And at this kind of price, the viability of open access is very, very low in most of the states. That is why our open access volume has reduced to almost about 8% of the total volume what we have achieved. So there is a fall in that. And in FY23, again, it depends on the clearing price. If our clearing price is in the range of 3.2 to 3.5 rupees per unit, I'm sure the open access volume will increase. And but it all depends on supply situation improvement.
Okay, sir. Understood. And the second question is, there is a talk of unified carbon trading market. So is there any chance our company will play any role in it? Have you heard of anything?
Yeah. And we are fully aware about it. We are in fact interacting with the BEE, Bureau of Energy Efficiency. Bureau of Energy Efficiency along with the Ministry of Environment and Ministry of Power, they are working on this initiative. So we definitely intend to launch this. And this is initially they want to merge this ESCerts and the RECs, and they will have some multiplication factor to convert them into carbon credits and do the trading of that. And subsequently, more products will be added into this list.
Understood, sir. And sir, just one last question. There is some cash has increased from 46 odd crores to 225. So any specific reason for it?
Basically, it's the year end, and we need to have liquidity. Because if you look at the year end, the banking holidays, so we need to maintain that the surplus fund to meet our payout obligations. So that was surplus fund was kept because of the higher prices and the volatility in the prices. So you need to have a liquidity to meet out your payout obligations, and considering the bank holiday, we need to keep that liquidity reserve.
Understood. No problem. Thank you.
Thank you. The next question is from the line of Swarnim Maheshwari from Edelweiss Securities. Please go ahead.
Yeah, hello sir. Thanks for the opportunity and congratulations for a good set of numbers. So the first question is, what is really causing the delay in LDC? Because I believe it was well established from the apex court almost about quarter and a half back, and the CRC was already studying it very closely. So what is leading to the delay in the launch of LDC?
One is the regulatory process of admitting the petition, inviting public comment, and then doing the hearing. And in this case, since it is a new product which they want to launch, they wanted to understand the implication of this, understand the product details. So I think that process is over now. Order is reserved. So we should get order in this month itself, maybe in this month or the month of May.
Okay, so what time will it take to officially launch it from the day of getting the order?
We're ready to launch it. Anytime we get the order, we'll launch it.
Okay. So then I think it's a high chance that you may launch it in May or June itself.
Yeah.
Okay. So the second question is, don't you think that there is a case that, it's an established fact that in the month of October and again in the month of April or May, there are always this, demand supply issues, some sort of mismatch. The merchant prices goes through roof
and discoms have to ultimately pay very high price to get the things, and specifically when the international coal prices are very high. Do you think that this can revive the medium-term PPA sentiment in the country?
See, the point is, if this kind of situation continues for a long time means maybe 6 months, 1 year, then yes, there will be tendency on the part of the buyers to secure some contracts. But I don't think, October was for 15 days. After the first fortnight of October, second fortnight was very normal and things were very normal there. Price discovery was happening, prices also came down. I'm sure this time also it is for the month of April and maybe for 10 days of May. After that, the situation will be again normal. So, market development can take place only when we have sufficient liquidity in the market. I don't think any market can develop under deficit scenario. So, if deficit continues for 2-3 years, yes, there will be definitely a tendency on the part of discoms to buy, and that was the case prior to 2010-11. Lot many PPAs were signed because there was deficit of power in the country. But I'm sure, looking at the kind of capacity what we have, deficit situation is not going to continue for a long time, and we should have good liquidity on the sell side.
Okay, so no threat to the merchant capacity as per you.
Pardon?
So as per you, no threat to the merchant capacity that we have in the country.
No, I don't see that.
Okay, got it. Sir, one final question. Is now with the new exchanges coming and the existing exchange getting more aggressive in terms of market share and all, how do you respond if they were to reduce their transaction fees? Will you respond equally, or you will let the market share actually go away? If you can just help us with that, your thoughts on that.
We are operating in this market from the last 14 years, and from the last 14 years there are 2 exchanges. If reduction in the transaction fees can help in getting the market share, I'm sure exchanges would have tried that. But I don't think that can happen. The market share is dependent on the value which you provide to the market participants, the liquidity which you have on the platform. It is basically a function of that. For a generator who is selling power, for him it is important to sell that power. If that power is not sold, he loses the opportunity. And he loses the opportunity forever. For him, getting that revenue of 4 rupees is more important than 2 paisa transaction fees. And same is the case with discounts. So I think transaction fees is a very insignificant component in that whole process of sale and purchase of power. So we don't see any challenge because of this, and we don't want to enter into this game.
Got it, sir. But sir, what if it is actually more regulatory induced? Say if CRC, you guys have to respond within 15 days, and if CRC takes a case that 2 paisa, although PMR guidelines and all there, but then you still have to respond to that transaction fees thing which came on 25th of April. So if CRC was to induce it, then that will be for all the exchanges, and can it happen that you can be charged different transaction fees for different products? Is that a possibility, sir?
Now, first of all, different transaction fees for different exchanges means if you reduce my transaction fees, then you are asking other exchanges to close down.
No, sir, not different exchanges, different transaction fees for different products.
Yeah, different. All products are of similar nature. Whether it is day-ahead market or time market or wind market, they're all same electricity transactions. So I don't think that kind of a view will be taken. And as far as approval of transaction fees by CRC is concerned, as I explained earlier also, I don't see any challenge in that because the regulators themselves very recently, about a year back, have approved trading margin 7 paisa for the trading companies. And looking at the values which exchange provides, they themselves have mentioned in the regulations 2 paisa on either side. And I'm sure when regulator is mentioning the regulation 2 paisa on either side, they must have applied their mind before mentioning that. So I'm very comfortable in getting this approval.
Got it, sir. Got it. Sir, thank you so much and wish you all the best.
Thank you. Thank you.
Thank you. The next question is from the line of Aditya Chedda from InCred Asset Management. Please go ahead.
Hello.
Yeah.
Can you comment on the change in trade payables and trade receivables, which is payables is 635 crores and receivables is at 87 crores? What is the reason behind that?
The higher volume and the higher prices. As you know, the electricity has been traded at almost 14-15 rupees. So this has resulted in a significant increase in the payable amount. So this is the general temporary phenomena because of the market sentiments. Nothing different. As and when the electricity prices get normalized, it will again settle down at the average rate.
Okay.
Any other question, Mr. Chedda?
No, that's it.
Thank you. The next question is from the line of Pawan Kumar from Ratnatraya Capital. Please go ahead.
Sir, I wanted to understand, suppose in a situation like that happened in April where certain discoms like say Andhra Pradesh needed certain power, and if any private player also wanted power and he was bidding for the same power, so from the same state, is it like the discom has to purchase the power and then distribute it to the private player, or the private player himself can directly access the exchange?
The question is not clear. Which private players you are talking about?
Industrial players, because I am assuming discoms are directly dealing with both the commercial and industrial purposes. But if a private player directly wanted an industry who was facing some shortage of power, wanted access to additional power, can it get it from the exchange directly without going through the...
Provision is like this. These industrial and commercial consumers are the consumers of distribution company. They have taken connection from distribution company. They are paying demand charge to the distribution companies.
Okay.
Now, if these industrial consumers wants to avail power from the outside, if they are able to avail power from the outside at a rate lower than what distribution company is charging them, subject to open access regulations and open access charges, then they can do so. That is allowed at the end of the Act. And if they are not able to do that, then distribution company is obliged to supply them the power at the distribution tariff.
Okay. But in the case distribution company is not able to supply the power, the other route for them to meet their demand, is it through the exchange, or they have to get into bilateral contracts?
No, in that case they can buy it from the exchange. But the point is, if there is enough power available in the market, then distribution company will be most happy to purchase power and supply them power, because these industrial consumers are their paying customers. They'll be happy to supply them power. So that kind of a situation when distribution company is not able to supply them will happen only when there is a shortage of power in the country.
Okay. And in that case, actually, even the exchanges face the same issue.
Yes. You are right.
Okay. Thank you, sir. That was my...
Thank you. The next question is from the line of Aditya Yadav from Transient Capital. Please go ahead.
Hello.
Yes, sir, we can hear you. Please go ahead with your question.
Yeah. Hi, sir. Good afternoon to the management team. Sir, firstly, my question was regarding the long duration contracts. So for the long duration contracts to be launched, is it necessary that the derivatives should be launched before that?
Not
so that the players have more of comfort entering into longer contracts?
No, there is no such interlock. Both are independent activities, and derivatives are to be approved by SEBI and long duration contracts are
No,
to be
sir, I wasn't asking from the regulator perspective. I was wondering from the market perspective, from the participants' perspective. Do you feel that they will feel more comfortable if they have as like the derivatives have also come online and they can hedge their position, so they might feel more comfortable with longer duration contracts, and that might act as an impetus for you as well? Or do you feel confident it's okay to go ahead with the longer duration contracts without the derivatives?
Yeah, I don't see any issue in that. I mean, going ahead with long duration contracts without launch of derivatives can happen. And because already these bilateral transactions are happening in the market.
True.
Bank is also typically shifting those bilateral transactions on the exchange platform. So I don't see an issue in that.
Okay.
Launch
and
of
that you said is
launch of derivatives will basically bring more liquidity in the market and reduce price volatility. And there will be hedging options available to the market participants. So that will further deepen the market.
Sure. And as you had mentioned before, that anyways is a large market where you said the bilateral long contracts are around 50-60 billion units, if I got it right.
Yeah.
Okay. So my next question was regarding the developments on the gas business, the gas exchange business, where you've discussed a couple of quarter back, there were certain impediments in the sense terminals, certain GST issues, and a couple of other structural issues which are there before the gas market can be in a full-fledged mode. So if you can give further updates on that, so how have we come forward in last 12-15 months or so?
I mean, most of the impediments...
And what are your expectations for the coming 12, 15, 18 months in the gas business?
Yeah, I mean, most of the issues are still persisting. Gas is under GST, so there are different charges, taxes which are being charged by the different states. So, we are not able to launch a uniform contract across the states. That is one issue. Second is the system operator. Yes, there is a positive development on that. And Ministry has decided that they will create a system operator in the gas sector. So work on that is going to start very soon. Rationalization of transportation tariff. Regulatory PNGRB has initiated some action on that. It will take some time, but then yes, there is a good news from that. They have initiated some process in rationalizing the transportation tariff. The biggest problem what we are facing in the gas market today is very, very high gas price. And unfortunately, the prices are so high that they are unaffordable for the Indian consumers.
True.
And the gas price, which used to be $5-6, are today more than $30. So because of that also, gas exchange volumes are impacted. But I'm sure these gas prices, which are very high today, in the coming days, the prices should come down. And even if they come down to a range of $10-12 also, that will lead to good transactions on the IGX platform.
But the end usage of the gas continues, no, sir? The city gas distribution, and every other end usage continues, although the high prices are there. So, we are in a nascent stage and the business is developing, but the ecosystem is running. Apart from the power part, I agree where you said the cost goes too high for the power generators from the gas fuel. But you feel
city gas distribution is getting gas out of the government produced gas, which is the administered price gas. So the gas which was given to the power sector is now getting diverted to the city gas distribution system. And industries, they are forced to buy gas at high price, but many of the industries are now switching over to the other fuel options. There was a time when using naphtha was almost 30% costlier than using gas. Today, using gas is 30% costlier than naphtha.
Okay.
I think economics has changed, but gas price coming down to $10-12 will again change the whole economics, and industries will stick to the gas, and gas will become affordable at that price.
Okay. So, and the other issues also you mentioned, so like in coming quarters, let's say, or we should expect more rationalization from the...
Yes. I mean, government is also committed to increase consumption of gas in the country. Today, gas consumption is 6% of the energy basket. And in the developed countries, the share of gas is almost about 25%, 30%. Government has decided to increase gas share to almost about 15% by 2030. If government wants to do that, government will have to create a vibrant market in the country. And that can happen only when all these issues which we discussed are removed. I mean, GST is something which is necessary. If you don't have a uniform price across the country, then how buyer and seller will know what kind of costing they are going to have.
True. Okay. Sir, my last question is regarding the pricing we charge on the transactions. Sir, why does can you help us understand the regulator's rationale behind traders getting a 7 paisa price, and whereas exchanges are capped at a much lower price per unit?
Now, if you look at the 2010 regulations for trading margin, there was a provision of 7 paisa if the rate is more than 3 rupees, and 4 paisa if the rate is less than 3 rupees. Since the power rate has increased to more than 3 rupees, the regulator feels that the second option is redundant now. So they have made it 7 paisa. Very simple. In case of gas, in case of exchanges, they feel that this is a technology platform-driven process. So, and exchanges are charging 2 paisa on either side from the last 11 years. So this is a market accepted practice. So they have specified 2 paisa on either side.
And although there have been questions regarding the competition and the pricing and everything, and you addressed it very well, you provide much more value to the ecosystem. Are there possibilities that we could have an upward revision in exchange fees, or is that very remote?
Upward revision will take place only if we ask for it. We don't intend to.
You don't intend to. Okay. Understood, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Lokesh Shetty, an individual investor. Please go ahead.
Hello, sir. Thank you for this opportunity, and this happens to me my first question. So thank you for the opportunity. I read some time back in one of the interviews that there is a plan to launch an IPO for IGX. Do you think now is the right time, or do you think that the plan is to wait for things to get regularized in terms of GST and the other bottlenecks that we are facing with the gas exchange?
I think you haven't read the fine print in that. What I said was that as per the PNGRB regulations, we will have to bring down our stake in IGX to 25% within 5 years. of the issue of regulations. So our exchange got PNGRB approval in the first week of December 2020. So by 2025 December, we will have to bring it down to 25%. So that means we will have to divest 25% equity. And I mentioned that the best option to divest this equity is through the IPO process.
Right.
So that means IPO, we will like to hold the equity as long as we are allowed. And whenever we have to divest it, we'll explore this option of IPO.
Right, sir. So there is a possibility that you can explore the other routes also, like tying up with the other. Okay.
Based on the market conditions, 3.5 years down the line, how can I say today what will be the best option? But as of now, what we understand, what we see, that IPO is probably the best option.
Right, sir. Yeah, that was my only question.
Yeah, thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Sumit Kishore for closing comments.
Thanks a lot, sir, for your time and for giving Axis Capital the opportunity to host this call. Mr. Goel, would you have any closing comments?
Yeah, I would like to thank each one of you for being part of today's Concall. There have been many significant developments in the fourth quarter and fiscal year 2022. However, there are few challenges too, especially the increasing energy prices, including the commodity prices driven by various factors, including the global factors. We are working proactively to further develop and strengthen the recently launched market segments, which have immense potential for the growth. At IEX, we remain committed to doing our bit towards facilitating India building a sustainable and efficient energy future. Thank you. I look forward to our next interaction with you. Till then, take care and stay safe. Thank you very much.
Thank you.
Thank you. On behalf of Axis Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.